CEO of ARK Invest, Cathie Wood, continues to maintain that Tesla is performing very well when compared to its rivals, even in light of the challenging market conditions that have made it difficult for the automaker to fulfill its quarterly profitability and delivery targets. The flagship fund of ARK, which has lost over 60% of its value this year, currently owns over 3 million Tesla shares, which are valued at approximately $739 million. As it prepares to increase its earnings in the upcoming months, the investment business is still adamantly positive on Tesla and believes it can weather deteriorating economic conditions. Greetings to all, and thanks for returning to Everything Tesla stock. In recent weeks, Tesla's stock has experienced significant declines, compounding the company's struggles with severe market downturns in recent months. Nonetheless, Cathie Wood, the CEO of ARK Invest, an American investment management company, is confident that Tesla shares will rise quickly. ARK revealed in April that it believes the price of Tesla shares will more than quadruple to $4,600 by 2026. Additionally, the investment firm disclosed that it expects Tesla shares to trade around $3,000 by 2025. The corporation took into account a number of important elements that will probably cause the stock price to fly into the thousands, even if it has since revised its price estimate in light of increased expectations regarding Tesla's performance. It stated that these revised projections will be greatly influenced by elements like Tesla's FSD capacity and possible robotaxi company. How does Cathie Wood feel about the shares of Tesla? Watch to find out, but before we do, remember to like, subscribe, and switch on notifications if you enjoy this kind of stuff so you never miss anything in the Tesla world. With almost 10% of the assets in the ARK Invest ETF fund, Tesla is the top shareholder, with 8% going to Zoom Video Communications and 7% to Roku. As of September 30th, Cathie Wood held 4.98 million shares, representing her biggest holding with a 7.55% weight, according to current data. Tesla is a prime example of the disruptive innovation stocks that Wood is recognized for investing in. With its cutting-edge EVs and self-driving technologies, the automaker has completely taken over the automotive industry, and it is expected to grow even more in the future. Cathie Wood has long been an advocate of Tesla stock, stating in her letter from the third quarter that it is one of her portfolio's best performers. By way of the flagship ARK Innovation ETF, Wood revealed in October that she had purchased 66,190 shares of the electric vehicle manufacturer. Based on Tesla's closing price, the transaction was valued at $13.7 million. This was her second addition to her Tesla investment that month. Prior to this, Cathie Wood acquired 132,213 shares of Tesla, which at the time of purchase were valued at around $32 million. Following the announcement of Tesla's record third-quarter deliveries minus 343,000 cars, up from 241,300 a year earlier, the deal was finalized. ARK Invest appeared to be bullish on the manufacturer, even though a number of analysts were highly dubious about its performance, given that it had failed to meet analysts' forecasts of 365,000 deliveries in Q3. Wood acknowledged that all equities are struggling as investors attempt to gauge the Fed's next move and the extent of the recession. But she also pointed out that Tesla's ability to weather the storm was something to watch. Wood pointed out that innovation will play a role in resolving the food and energy crisis as well as supply chain concerns. Because of the increase in oil prices, Wood claims that consumer preference for electric cars like Tesla has increased, and she thinks this trend won't be reversing anytime soon. She went on to say that although she believes Tesla is the answer, there is a problem with oil pricing. Do you have the same thoughts? Please share your thoughts in the space below. Don't forget to subscribe, like, and switch on notifications. Wood has stated that Tesla must reduce expenses in order to increase sales. She asserted that Tesla can significantly boost sales by reducing the cost of producing its EVs by 50%, in light of recent worries about the company's demand. In a communication to investors, she made this statement and said that by halving the price of an electric vehicle, Tesla could increase its addressable market by 10 times. With the cost of electric vehicles coming down, Tesla may be able to lower the price of its vehicles and eventually boost sales. Although this is a sensible strategy, Tesla cannot reduce production costs unless it has control over its supplier chain. Because of inflation, raw material costs have increased. Tesla may be able to lower the price of its cars if it can get these basic materials for less money. A deal between Core Lithium and Tesla was announced in March about the possible supply of 110,000 tons of concentrate from the Finniss lithium project in Darwin. Additionally, recent reports state that Tesla has committed to purchasing $5 billion worth of nickel production from Indonesia over the following 5 years. The EV sector depends heavily on lithium and nickel, and Tesla will require a lot of raw materials, particularly nickel, which is a crucial component of automobile electric batteries, if it hopes to sell 20 million vehicles by 2030. Tesla plans to sell 20 million of these vehicles by 2030, and the key to this ambition is their innovative battery technology. Tesla was able to slash the cost of the Model Y in half, or more than 8% of the car's pricing in the U.S., by utilizing larger cells and innovative techniques for dry coating electrodes. Even if this is a useful method of cost reduction, Tesla is still a long way from reaching its goal, and the automaker is experiencing difficulties ramping up manufacturing to full capacity. This is because Tesla needs some time to properly grasp the novel technology involved in the dry coating process for these 4680 batteries. Regarding Musk's acquisition of Twitter, Wood said that Musk's control over the social media network is precisely what it requires. She expressed her excitement about what he will do with it. She continued by saying that she believed the CEO of Tesla will collaborate closely with Jack Dorsey, the founder of Twitter, and that they would remove the platform's censorship in order to open up the ecosystem and make it much more valuable and transparent. Many analysts of Tesla stock expressed doubts about the agreement after learning of Musk's acquisition of Twitter, believing it would negatively affect Tesla stock in the long run. Musk's withdrawal from the transaction earlier this year added to the already high level of worry. Nonetheless, it appears that there is some good news, as Musk has indicated that the sale would shortly be completed. The CEO of Tesla revealed ambitions to turn Twitter into a massive advertising website in a recent tweet. He stated, "Twitter aspires to be the most respected advertising platform in the world that strengthens your brand and grows your enterprise." Several analysts are growing increasingly bullish about Musk's Twitter deal, in contrast to earlier views that suggested it would not be the best course of action right now. Cathie Wood of ARK Invest thinks Tesla is spearheading the switch from internal combustion engines, ICE, to electric cars. Wood has previously noted that the demand for petrol has decreased to levels not seen since the late 1990s. She continued by saying that this is an example of actual demand destruction that would not have been possible in the absence of electric vehicles. Traditional cars are losing ground to electric vehicles in a number of global automotive areas where they have been dominant. Gas-powered cars are clearly becoming less and less relevant, and Wood has said that ICE automakers need to find a method to balance this out and move their products into the electric vehicle market, which is the next big thing. The stock investor also mentioned that the United States and a number of other nations are currently experiencing recessions. According to Wood, this enormous inventory overhang, which will eventually experience an inventory correction, is the cause of the current economic downturn. She stated that the system is in a shock zone and that we anticipate an increase in inventory overhang as consumers pull back. Without a doubt, electric vehicles, EVs, are the future big thing, and Tesla's main objective is to spearhead the global shift towards sustainable energy and driverless driving. How do you feel about this particular performance? Do you believe Tesla will keep controlling the EV market? Please share your thoughts in the space provided below. Additionally, if you'd like to see what Tesla has been up to lately, click the next video that appears on your screen. I'll see you over there.